Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'd like to discuss how to trade Forex as a process today because it's something that a lot of the folks that I'm talking with, almost all of them, don't understand the importance of having a process as opposed to a system, for example, which is the first real topic that I want to take a little bit of time to discuss on this beautiful early March morning in 2026. I just got off the boards. I had a carry trade. Was fortunate enough to make 3% on that trade. When you carry over, you're looking for more than 10 pips or something like that. So, but of course your risk increases dramatically as well. And I've been down 4% on this particular carry. I've had it a couple of days now. Let's see, a couple of days. Oh, this is just overnight. And had another carry trade yesterday. I made 2.2% or something against risk on that. So I'm doing really well right now, but that's not to get my head all wound up because I have a process that I follow, and that process negates losses and wins. It's based on following a series of steps to accomplish a particular goal. In doing any process, you have to have a specific goal or target or band of acceptable outcomes that you're shooting for. And then the work that you do to prepare for that, your trading plan, for example, which contains your business rules, it contains your all kinds of stuff, as well as the framework for the actual trading rules that you have. You have static rules that you follow, what we call major rules, and then you have the static runtime rules that you have. How do you build that if you don't know where you're trying to get to? So you can't just say, oh, I'm going to try to make as much money as I can. Or like a lot of you, I'm trading 200 to 1, so I should be able to make 400 bucks a day on my couple of $1,000 account or $1,000 account, whatever it is. That's not necessarily the case, because without following a specific process with specific targeted goals within a certain bandwidth, you have no idea of how well you're doing at any given time. One of the major benefits of having a process is that it is clearly defined and it is supported by certain metrics. In our world of trading Forex, those metrics are even more critical than anywhere else because of the probabilistic nature of overall trading, but it's particularly important in the Forex market because it's, at this point in time, a $7.6 trillion a day market. That's a shithouse full of money, but it just doesn't change course and go somewhere randomly. There is a method to the craziness. The more complex a system becomes, the more ordered it becomes. That's just the way that nature operates. Einstein identified that in his E equals mc squared. And there's a balance between energy and mass. You can't have all energy and no mass. You can't have all mass and no energy. There's a balance between that. There's a balance between good and evil. There's a balance between day and night. Once you overdo that and you get so far to the end of bad trading habits, it's like a black hole. You're trapped there. You can't get out of that. So you have to understand what the spectrum of your risk profile and profit profile are, which are basically the same thing. Part of your trading plan helps you identify what those boundary conditions between risk and profit are, and those are based on the size of your account, your experience, the currency pair that you're trading, the time of day that you're trading. All those are elements of determining your process, which creates a stable enough environment of a series of a large enough series of trades, maybe 100 trades or something, to get a good sense of what you're doing, and not 100 trades in 2 weeks. 100 trades over 6 months or 400 trades over 6 months As an active trader, I'm making about 1,200, probably more than that, transactions, the actual trades that I make. And those coalesce down to probably, between 400 and 600 actual positions. Because a lot of the times those transactions are staging or building into positions. I'm not doing so much of that now because I'm not trying to make $1 million like I was before, taking all that energy trying to get something that I don't need. And so I'm having more fun now with just plugging along with small account and building that and enjoying that in that process. And also eliminating some of the bad influences that my 40 years in real estate had as far as risk management goes, because that's completely the opposite of what I need to do in currency trading. So that's been my problem. It's not a problem for my students because nobody has 40 years of real estate background in risk management that's going to encumber them. So the process that I can share with a student in my fast track course becomes logical for them. If the process isn't logical, then you go, well, maybe I could do this. And I've got students that do that. I show them something and they go, well, and then they come back with their transaction register and they go, well, I got beat up pretty bad. I've lost, 20% of my account. Oh, well, why did you do that? And then I look at the transaction register and I say, well, what possessed you to do this? Well, I thought. And then I have to stop myself. I don't give a fuck what you think. You have a process that you follow. You're not supposed to think. You're supposed to act upon the principles that you thought about developing before. That's when you think. You can't think in real time. You have to follow your process in real time. Otherwise, the little demons of hope, fear, and greed will juxtapose themselves in the wrong places, and they'll really screw up your trading. The process will keep you out of that. So how to trade Forex as a process? Well, first we have to define the difference between a process and a system. And then we're going to talk about sequential process. Then we're going to talk about relevant information in sequential order. And then we're going to talk about principle-based rules. That's the process of this video, which is going to take you through how you trade at Forex as a process. So what is a process? And the correlation to that is process and system. And a lot of people misunderstand that. A system is like when the short MA crosses a long MA, or the Bollinger Band is in confluence with the RSI. All of these indicators are they're systems. They are not conditions. They are systems. When this happens, then I do that. And it's a canned thing instead of having a process. And I get along a little bit further. I'll show you what the process is. Because in systems, the system becomes static. When you have a process, it's built on rules. A system with a rule that says, take the trade when the short MA crosses a long MA is not a process, and it's not really a rule. It's a trigger. I could say, well, I've got a gun and I pull the trigger. Okay, that's what makes the gun fire. But unless you point the gun in the direction that you want to fire it, and you understand that you're within range of the capability of the gun to hit the target, the bullet to hit the target, then you don't pull the trigger. That's the difference between a process and a system. System just says, oh, you want to shoot the gun, pull the trigger. A process says all these other things that lead up to that, what you call an action event. That's the difference. Process versus system. You don't want to be thinking in terms of systems. And the way that you determine if you are looking at a system is if you're using any kind of an indicator to make a decision, then you're using a system. You're not using a process. Okay, so that's process versus system. The next element in discussing process is that process, those elements that make up the process, those steps, have to be in sequential order. And the reason that the process is in sequential order, because then it leads to sequential rules, which are based on sequential conditions. And we'll get into that right now, because you have to understand the difference between sequentially ordered information as opposed to non-sequential information. If I have red, green, brown, black, those are, let's call them conditions. There's no sequence to them that's set, unless I say, well, I want yellow, and then you combine certain things in, but you don't even have to do it in sequence. Then you just take a couple of colors and put them together and go from there. So that's non-sequential data, colors. Sequential data would be getting into your car and driving to the grocery store. You can't turn the car on until you get in. So there are things in the world that we must do sequentially to arrive at the correct and valid outcome. And there are other things that we can do that don't require sequential stuff. I go to the local water park in the middle of the summer, and there's no sequential order to the rides or the slides and stuff that I go on, or when I eat lunch. It's just a happy day. And that's great. You're relaxed and you have a good time. When you're trading, if you have non-sequential rules, non-sequential data, then you're making up your mind what you need to do in real time. And that's the problem with indicators. I'm dealing with a Bollinger Band or I'm dealing with an RSI. You'd think, well, I'm just dealing with two things. Well, no, you're not. You're dealing with four decisions, and those are called permutations. So let's call the Bollinger Band thing A, and let's call the RSI B. It could be anything that's non-sequential, okay? So you have an A and a B. So I can have A by itself. I could just use A, just use the Bollinger Band by itself, or I could use B by itself, or I could do AB, which is putting more emphasis on the A and then looking at the B, or I could have BA, which is putting more emphasis on the B first and then do the A. So I can have A, I can have B, I can have A, B, and I have BA. So from two conditions, I really have four decisions that I could make. And not to encumber this, because I go through this almost every video because it's so important, is that if I had three conditions, I jump from 4 permutations to 15. If I have 4 conditions, I have 64 different permutations you can put those 4 things in. And 5 conditions, there's 325. That's just a shithouse full too much. Even having 3 things that you're looking at, RSI, Bollinger Bands, and it's raining, you have 15 different choices that you can arrange that information in, and that's too much. It's easy to drive a car because all of that stuff has to be in sequential order. Once you're driving the car, now everything becomes non-sequential and it becomes more complex, right? Because I could turn to the left, I could turn to the right. It doesn't matter whether I turn left or right first or last unless I've got a map. But if I got a map, then I'm on a process that's larger than the problem that I'm trying to solve with driving the car. Once you're in your car and you're driving, then you have a map that shows you where you need to get to. And if you're trying to go from point A to point G, then you go A to G. You don't go A to B to C, F, back to A, and then to G. You just don't do that. So the map provides you the process. It provides you the path in an organized path. So sequential process is based on stuff that needs to be in sequential order, because then you're going to build rules to trade by, which will be in sequential order. And those rules will be triggered, that action event, by a series of sequential conditions. So for example, in my life cycle of a currency position that I teach in my fast track course, that's a rip against my 33-year career as a software engineer, where we use the software development life cycle, the SDLC, which is a complex process used by software engineers to solve complex problems. And what it states basically in a nutshell is that you look at a problem, what we call a problem I want to write a membership application. Oh, okay. Well, how many problems are there? Well, you got to get in contact with the person and you got to take their data for the membership application. Okay, so that's a problem. How do I get the person's data? Well, I should be able to solve that with one rule. If it takes 2 rules to solve it, then I need 2 problems, not 2 rules to solve one problem. It just simplifies breaking complexity down into easier pieces. And that's the way that the software, the life cycle of a currency position that I have, that I built off of the SDLC, I have entry analysis, position management, and exit methodology. I can't exit a position until I get into it. I can't manage a position until I get into it. I can't get into it last. I have to get into it first. So I have 3 sequential rules: entry analysis, position management, and exit methodology. And that's what I teach in my fast track course. And I teach them in sequential order. And the biggest problem I have when I get into this stuff is people are looking at that first part, the entry analysis, which is the most important thing, is your entry. There are guys out there telling you, oh, the entry is no problem. Anybody can get into the entry. It's getting out that's important. No. Getting out's really important, but getting in is more important, because if you get in wrong, you're going to be bumped out all the time. So you just get some, oh man, the educational process that's out there, guys, it's really sad, right? I mean, come on, you've looked at this stuff and you pay $1,000 or something for some shit course, and it's just telling you how to size your bank and trade against Fibonacci numbers or some stupid thing. So the life cycle of a currency position is entry analysis, position management, exit methodology. Because I have one problem identified there, because each phase is a problem, I must have one rule. So I have rule number 1, rule number 2, and rule number 3. Rule number 3 covers exit methodology. It has nothing to do with position management. It just deals with exit methodology. That's called, in software engineering, decoupled. What's going on in exit methodology doesn't have to know what's going on in position management. Position management in software engineering would pass a signal to the exit methodology rule, and the exit methodology rule knows what to do with that information. So there's communication between the problems, the rules that are solving the problems. I solve the entry analysis problem. I pass the situation over to the position management rule. It knows what to do. Each rule is based on a series of conditions, 2 to 4 conditions. This is a process that leads to solid rules based on solid sequential conditions that lead to a pre-identified result, whether that result is a successful reaching of your profit target, whether it achieves, your price achieves, as it becomes a runner and goes beyond the profit target, and you're going to ride that for all it's worth, or you get tapped out on an entry stop, or you decide to pull the trigger for other reasons that you've identified in your rules. That's a process. And if you can't see that, run the video back and let's go through. Maybe the examples that I'm giving don't make any sense. I try to give simple examples. I think driving a car is a pretty good example of that. And then going to a water park and just wandering around randomly. There's nothing wrong with wandering around in a water park randomly. That's what you're supposed to do. But if you're driving a car, then you better be sequential in your process. Okay, so we've looked at process versus system. We've looked at sequential process. And now the next topic in building those processes is building them with relevant information. You have all this information about trading out there. In my fast track course, I break all that information, the hundreds and hundreds and hundreds of terms and ideas and concepts. I break it down into 7 major topics that are in sequential order. And I take each one of those topics, and they each have 3 to 4 or 5 subtopics to it. So example, one of the major terms that you need to know is what a Forex trade order is. You're making an order to go into the market. Well, you can have a short order to go short. You can have a long order to go long. You can have a limit order to go in at some designated time. That limit order could be a stop order or an entry order. And then you can have a market order, which you go in right then. So those are the definitions under order. But once you know what an order is, then it's pretty easy to remember the difference between a limit and a market order. Everything is simplified for you, and it's in sequential order that you're going to meet in your trading experience. Now, even if you have 2 or 3 years or 5 years of experience, that doesn't necessarily mean that you know all this stuff. You may be doing it simply because you got beat up so much in the beginning that you learned what not to do. And so you're successful because you just don't do the stuff that you know you're not supposed to do. But that doesn't necessarily mean that you understand trading. And by understanding trading and putting things into process will make you much more confident in what you're doing and able to withstand those times when you'll get 6 losses in a row. Because if you're an active trader, in 300 trades, you have a very high probability that you're going to get 6 losses in a row. Well, you could get 6 winners in a row too. Yahoo, that's great. What are you going to do if you get 6 losses or 7 losses in a row? And the statistics go on and say you could get 13, 15 losses in a row. 2 of the greatest traders in the 20th century were they had 25-year careers, and each one of them said twice in their career they had 20 losses in a row. 20 losses in a row, that's a lot. And these guys were running big funds. They weren't just retail traders trading with a couple of $100,000. These were serious guys making a lot of money. But to have that number of losses, that's having the system that's process oriented takes all the misunderstanding and the fear out of it, because you say, oh, I know what my metrics are because I got a good process and I'm just hitting these 6 losses in a row. That means pretty soon I'm going to get a winner, and have that confidence that will happen. But all of that is not based on knowing all of this information. 90% of the information you don't need to know. And of the 10% of the information you do need to know, you only need to know about 1% of that in order to get into the trade, to do an entry. And then when you get to position management, now we're going to talk about congestion patterns and support zones and how wide they are. But you don't need to know any of that. When you're learning how to drive a car, you don't need to know how to change the oil. You don't even know need to know what a red light is to stop at. To learn how to drive a car, you need to know how to get in, how to put the key in the ignition or the fob, get the car going. You got a brake and you got a gas pedal and you got a gear shift or a lever to throw you into go. Well, that's all you need to know. And then once you learn that, your instructor is going to say, don't step on the gas pedal too hard because you're going to run into that tree. What happens when you run into the tree? Oh, I'm going to crash the car. Great. And that's what we do in the fast track program, is we're going to teach you what you need to do to enter the trade. And then you're going to lose. Great. Why did you lose? I don't know. Okay, well, let's look at it. Oh, I understand why I lost. Now you have a need to know why you lost. When you're just sitting there with your beer, trading crazy shit along the line and thinking that it's just like a roulette wheel. Sometimes I win and sometimes I lose. No. A few times I win and most of the time I lose because I have no coherent view of the relevant information that's involved. So you need to separate the relevant information from all of the information. And once you separate that, which I teach in the fast track course, is that the relevant information then gets put into sequential order. You see this sequential order thing coming up again? Geez, it must be important. So you need to know the relevant information from all of the information, and you need to make sure that that relevant information is a small subset and that it can be placed in sequential order. And then your mind will be able to track through and solve the problems that information has the capability to provide as basis for your rules. Next and final on my discussion here is going to be principle-based rules. We've looked at process versus systems. We've looked at sequential process. We've looked at relevant information in sequential order. And now we're going to look at principle-based rules. A rule just can't be, again, when this happens, I'm out. It has to be based on some principle. A principle in trading would be based on the metrics that I have, I can expect on a monthly basis to make 4% against my risk or 6% against my risk. Not return against your portfolio, that's stupid. It's to return against the amount of money that you risk. The amount of money that you risk is on a rolling basis. Today I'm going to trade 3 lots, tomorrow I might trade 15. And then I drop down and I'll trade 3 lots, and I'll trade 5 lots. If I trade a 5-lot position with a 25-lot capable bank and I make X amount of dollars, is the percentage return based on the full amount of my bank, or is it based on just the money that I put at risk at that particular time? I mean, those are decisions that, well, they're not decisions. They're part of the rules that are inherent within your trading plan. So if you don't know how to think in those terms, you really need to maybe send me an email. I'd be happy to set up a quick video conference with you and say, oh, okay, well, let's go through this stuff and see if I can't help you figure that basic stuff out and get you on your way. And then if you're really having a problem as far as understanding the full scope of process, or you're having some kind of an issue that's more encompassing than just don't do that, then you might want to ask me questions about taking my course. I'm not going to push the course at you. I will talk about the course simply from the standpoint I'm talking about the course now. I'm not trying to sell you anything. I'm talking to you about how trading should be done, and that's how the course is structured. The whole thing, the whole process is based on solid principles. A principle would be, I'm going to make 300% on my money in 3 months. Really? Is that realistic? Can you find the principle behind the logic that says that you can do that? Oh, well, this Joe out here can do that. Yeah, he can do that. But if he can do it, and everybody else should be able to do it because he's teaching that, then why can't everybody else around him do it? It's because he doesn't know how to teach. He doesn't understand principles. He got lucky. He's got a big account. He can lose $30,000 and come back the next day with a $300,000 account and make the $30,000 back in a couple of days. So you have to look at what's going on behind the sheets to determine whether somebody has principles that they're trading for, or whether they are just trading. And for the most part, 90% of traders lose 90% of their money in 90 days. Unfortunately, in a very real way, because people are losing their money. They're going in based on people telling them to, you can trade your $500 at 200 to 1, and we're going to base it on Fibonacci's. All of that is voodoo. But you want to believe it. I've only got $500. Great. Go buy, use it as a down payment on a car, but don't trade currencies with it. In trading, if you don't understand how you got there, if you didn't have a process, then you can't teach it to somebody else, because all you're teaching them is lose, 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 lose until you figure out what not to do. That's like a guy who runs through a minefield and he's successful and he's waving his hand. Hey, I know how to run through a minefield. Come on, follow me. Those are not principle-based rules, principle-based living. So process-oriented trading is built on sound foundationing principles. And those principles are not found in the framework of the rules of your trading plan. They're somewhere else. And if you don't have a trading plan that encompasses all that stuff, you don't have a roadmap. So you're constantly going to be driving your car off the road because you think that this might be the way or that might be the way or whatever. You may be successful in getting there, but that doesn't mean you know how you got there. So what I'm trying to teach in Fast Track course is understanding how you got there, because that's more important than getting there. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.